Hey everyone, welcome to Someone You Need to Know. I'm your host, Rashanah Baldwin, award-winning journalist, powerful storyteller, and social architect. Each episode, we dive into the stories of trendsetters, change makers, and everyday heroes who are shaking things up and making a real difference. Get ready to hear the good news you won't find in the headlines, inspiring stories of people leaving the world better than they found it. Now, let's dive into someone you need to know. Anthony Simpkins, President and CEO of NHS Chicago, my boss, my colleague, someone I'm happy to know. Welcome to my podcast, Someone You Need to Know. I said I had to have you on the show. June is National Homeownership Month, and we got to talk about the importance of homeownership, economic development, community revitalization, and generational wealth. But before all of the great stuff we dive into, can you please tell the world who's watching and listening how you went from doing all the great work at the city of Chicago to now NHS Chicago, which is one of the largest CDFIs in the state of Illinois?
Shauna, hello. I'm so excited to be on your podcast. You've been out there doing the work in the community for a very, very long time. So it makes all the sense in the world that if I'm going to be on somebody's podcast, that I will be on yours. I think we both share a love for community and for our people and the residents of the city of Chicago and the Chicagoland area. And yes, I also have been doing this work for a long time. I started out of college. So I went to U of I and then to Loyola for law school and grad school. And I started uh, doing legal services. So I was representing, um, people that need legal services, but didn't necessarily have the ability to pay for lawyers. And I did all kinds of stuff. I did public benefits. I did a lot of housing work. And then actually, I was for a while at the Legal Assistance Foundation of Chicago, which is Metropolitan Chicago, which is now Legal Aid Chicago, I believe. And the office that I was at was the Inglewood office, right off of 63rd and Halstead, before the mall was completely gone. So the mall was actually still there, or the remnants of it. And then, yes, I went to go work for the city of Chicago as a lawyer for the law department. I did housing courts, so did a lot of code enforcement. Part of my particular practice that I brought to the law department was to really focus on what we call frequent flyers, these real slumlords that owned terrible properties and treated their tenants differently, and took a lot of them to trial. I got multi-million-dollar judgments, and had some folks actually enter agreements, and that they were not allowed to do commercial real estate in Chicago anymore, stuff like that. Worked on a lot of innovative programs. I went from there to the Department of Housing, which really worked on community development, affordable housing programs, and was able to work on and help create some really innovative programs. We kind of resurrected the Troubled Buildings Initiative program. We worked on the Micro Markets Recovery Program. We created the Distressed Condo Act, state law, and the program. Lots of stuff. Worked on inclusionary housing, the ARO. It was great. And as a matter of fact, and then I actually went from there. Justice Freeman on the Supreme Court appointed me to the bench. And so I was actually a judge, a circuit court judge, traffic court, and then eventually housing court. And in all of those iterations, actually, I had an opportunity to work with neighborhood housing services. NHS was one of the delegate agencies that administered the MMRP program, the TDI program, and did receiverships in housing court and a lot of stuff. So I got a chance to work with them quite a bit, and was just really fascinated with the work that they were able to do. I think the thing about neighborhood housing services, where I am now, is unlike a government agency, it's really focused on and able to connect with community and connect with the residents that live in the neighborhoods. I mean, in a way that, I mean, it's just not possible for government to do it, to do it. You know, we often say to people at NHS that, you know, we're your neighbors, because we are, right? The people that work here live in the neighborhoods that we serve. I grew up on the south side of the city of Chicago. I live there now. And so it has particular meaning to be able to work in and advocate for the people in the neighborhoods that have been ignored and oftentimes exploited over the years, been cut off from the ability to build wealth in thriving neighborhoods purposefully in many instances. And so to be able to work with people every day to try and reverse that, to make our neighborhoods thriving communities where people want to live, I mean, it's kind of, you know, it's like a dream job, right? This is what I've always really wanted to do. And so now I have an opportunity to be able to do that. NHS has been around for 50 years, started in 1975, and that community connection is in the DNA of NHS. It started with Gail Sankata and all of the people that were advocating against redlining and forcing banks to lend and invest in communities that they had ignored for so long, even though they were taking our deposits and using our money to invest in other neighborhoods. And you know, that's been an ongoing fight, an ongoing struggle for a long time, ever since.
Can you talk about the work, the policies that you glossed over that you helped to create at the city of Chicago? How is helpful to CDFIs like NHS that didn't implement the work you
Well,
did?
and so for the people that are listening that don't know what a CDFI is,
Yeah.
it's a community development financial institution. It's actually an official, sort of federal designation. And what it means, basically, it means it's a nonprofit lender, whether you're doing mortgage lending or whether you're doing small business lending or other kinds of lending. It's a nonprofit lender whose job is to focus on disinvested communities, underinvested communities, marginalized communities, right? So this is what we do. So we're mission driven, right? We don't just lend mortgages because it's good business. We lend mortgages because we're trying to put people in homes so that they can build wealth for their families and they can build strong communities. That was one of the things that attracted me to NHS, is because NHS is really focused on home ownership. We've always done community outreach, we've always done sort of community revitalization writ large. We've done multifamily housing, we've done lots of different stuff, but the focus, especially now, is on homeownership as a vehicle for both family and community wealth building. Homeownership, you know, since probably at least the 1930s, has been one of the main vehicles for people to build wealth, enter the middle class, create wealth for their families, send their kids to college, open small businesses, save for retirement, et cetera, become investors. And so we want to plug the people in our neighborhoods into that. It circulates dollars within the community. It supports small businesses. It creates a sense of community. You know, I was leaving out of the house the other day, and some people just moved into this great young couple just moved into a house 2 doors down from us that had been vacant for a little while. Somebody rehabbed it. And their kids were out playing, running around, making noise. And I remember that sound from when I was a kid, right? When I was a kid, the block was full of children, right? We was all out playing. And those are the neighborhoods, those are the communities we want to build, right? Thriving communities where people's kids are outside playing and the neighbors all know each other. And, you know, you have people who have lower incomes and, you know, maybe need a subsidized apartment, all the way to, you know, upper middle class people who are doctors and lawyers, and they're all living in the same community. That's really the kinds of communities that we want to promote, and we want to help people build. So what does NHS do? We
Yes.
are CDFI. We do mortgage lending, and we try and create mortgages that that address the barriers that often keep low and moderate income people of color from being able to get mortgages and buy homes. We are a real estate developer, so we build and rehab homes, 2 flats, townhomes. We are a HUD certified housing counseling agency. So we have home buyer education to teach you about the process of becoming a homeowner and buying a home, financial counseling, how to strengthen your financial position to get yourself qualified to get a mortgage. We also have a wealth building curriculum now where we teach people how to build personal and household wealth, 401ks and stocks and bonds, how to buy investment property, be a landlord, how to do estate planning to protect your assets and make sure that your wealth can be passed down to your children. And we also do, which you just alluded to, we do a lot of policy advocacy too. We manage programs for government, for city, state, county, a lot of the home repair programs that are out there for low and moderate income homeowners. You can apply and get some free repairs done to your home. We manage a lot of those programs. And so we work with a lot of local GCs that live and work in Chicago. We are down in Springfield, we're in Washington, D.C., we're in City Council, advocating for policies and programs that benefit the residents in the neighborhoods in the South and the West Side and the South suburbs that we service, to help them address their challenges and also to help them realize their aspirations.
As we shift into like the bigger picture of the CDFIs, can you talk about how NHS specifically is working to use housing as a tool for economic development? That's like a big, grandiose question. What does that look like on a simple term to create home ownership and affordable home ownership for economic development in these neighborhoods?
So that is a big question, and that's one of the reasons why our focus really is on home ownership. Home ownership, as I said, for a long time has really been a wealth building tool. It's been a way for people to enter into and then solidify their position in the middle class through the value appreciation in their homes, which they can leverage, they can sell, whatever. They can invest. And so it is an economic development tool. When we go out and we rehab vacant homes, we build new homes on a vacant lot, we're improving the physical presentation of the neighborhood, right? We're also bringing new residents into the neighborhood that are going to circulate their dollars in the neighborhood. We're creating jobs for the contractors that build and rehab the homes, and the real estate agents and the lawyers and the architects and the surveyors. We're bringing rooftops into the neighborhood. They're going to shop at the local businesses. And we are allowing people to create community. It is one of the most powerful economic development tools that they are. The Bureau of Economic Statistics keeps all of these statistics about how different activities circulate economic impact in the neighborhoods. And one of the most powerful ways to circulate and create economic impact in a neighborhood, in a city, in a town, in a county, is by building and rehabbing homes and filling those homes with families that own them. So it's a powerful economic tool to increase wealth. And when you increase economic capital, along with that comes political capital, educational capital, social capital. So this is a way of really strengthening neighborhoods. You know, we've, as a country, we have spent billions and billions of dollars over the last, 60, 70 years in affordable housing. But haven't really, as you know, you can drive through many of our neighborhoods and they still look the same over that time period. As a matter of fact, nationally, the Black middle class has only grown by like 2% since like 1971, right? So just building affordable housing is not the key, right? It's addressing the economic opportunity, economic growth in communities. And so that's what we do. That's why we don't just say rehab homes. We rehab homes, we build homes, we focus on 2 flats, for instance, right? Because that's a way for somebody to be a homeowner, but also generate residual income for their family. And it also then creates a location for affordable rental apartment for somebody, right? We don't just do real estate development. We also educate people how to become homeowners and how to get a mortgage. We do community outreach and we're knocking on doors in the neighborhood and seeing what people in the neighborhood need. We are making sure that people have mortgages they can afford and provide them long-term economic stability. We're doing all of it all at the same time. And that's really that comprehensive approach is how you are able to really achieve the social and economic impact of this work.
So June is National Homeownership Month, and
Yes.
a lot of younger Chicagoans are still questioning whether or not home ownership is worth it. In your view, how is owner? Well, you kind of talked about how home ownership is still a tool for economic development.
Mhm.
Why is it a tool, or why is it not tool? Why is it crucial for these young people, especially in Black and Brown communities, to consider investing in their own neighborhoods through home ownership?
And you put it right. I like the way you said that it's investing in their own neighborhoods, right? Because buying a home is not just doing something that may benefit your family. You're investing in your community, right? You are an investor. Um, because that's interesting. So home does 2 things, right? It is a place, it's a home, it's a place where family grows together and emotional connections and your neighbors and all of that stuff. But it is also it's an economic investment, right? Which can generate returns for the investor. Millennials in particular are the largest demographic of potential homeowners in this country right now. And then you have, I don't know what comes out, what's the next after millennials, the next youngest set, whatever that is. What is that, like
Gen
Generation Z
Z.
or something?
Gen Z. Mm-hmm.
Gen Z, and then the folks after Gen Z. When I got to NHS, what I found was that, again, we do mortgage lending, right? We lend people that want to buy homes, refinance their houses. We have home improvement loans for people. And what we found was that the age of our average borrower was 41 years old. Sorry about that. Age of our average borrower was 41 years old. Now imagine if you had bought a home when you were 25, right? By the time you're like 50 or so, right? That home's paid off, right? And in the meantime, as the equity in that house builds, you may have been able to leverage that equity to buy an investment property. Your mortgage, unlike rent, which goes up every year, your rent gets higher and higher and higher every year, right? That's what happens with rent. Your mortgage stays relatively stable. Maybe your real estate insurance goes up a little bit, but a mortgage is much more stable housing expense than rent is. So what does that mean? And that gives you now the ability to leverage as your income is going up over the years, right? And your housing costs are relatively stable. That's more and more money that you have to do other stuff with, right? Improve your education, invest in, real estate or stocks and bonds or life insurance policies or whatever. It creates more economic opportunity for you. So for people to start that wealth building journey earlier is far more powerful than starting it in your later years. One of the things that we have found, because we have tried to sort of increase our outreach to younger people, right? People 25, 30, right? Um, and what we found is that sort of the idea that older people grew up with, the house and the white picket fence and all of that stuff, they're you still, they want to kind of be where it's hip and happening and all that stuff. When you talk to them about a home, a house, not just being a home, but also being an investment strategy, that they understand. So we're hoping to really spread the word that this is an investment for your family and for your economic future that you should be looking at as early as possible. And we can show you how to do that.
This may be one of those interesting, unique subjects of why do specifically in underserved neighborhoods, why is it more so we see more state of the art, new quality apartment houses, and we see versus creating more homes. And I see that a lot in Inglewood. I'm seeing it a lot in other neighborhoods. And it's our people who would rather get that apartment versus the house. It's like, well, that note is the same. In fact, their rent's $1,800. Why is that? I don't know if you can answer that, but why is that happening in typically underserved neighborhoods? You'll see all of the state of the arts, pop up affordable apartments versus homes. And you see CDFIs like yourself who have to struggle to create new homes in those neighborhoods and like, hey, no, we're creating a home for you, and they're ready to take the apartment.
So there's a lot in that question. I will say this. And this is one of the reasons why I came to NHS in the first place, is because affordable housing as something that government invests in, right? Cities, states, counties, federal government invest in affordable housing. And when you're building, these big, beautiful affordable housing rental projects, it's a big investment. It creates very important quality apartments that people can afford to live in. But it doesn't create wealth for a renter. It creates wealth for a developer. It creates wealth for a property manager, but it doesn't create wealth for the resident. Homeownership is an opportunity for the resident to create wealth. And you're right, especially in today's economy. People are paying, anywhere from $1,500 to $2,500 a month for rent for a decent apartment. And I mean, I talk to young people all the time. I'm like, your rent is more than my mortgage, right?
$1,800, $2,500.
I mean, wow, right? So Danny Davis, I was at an event with Danny Davis one time, and he this great quote. He said, at the end of 30 years, if you're renting at the end of 30 years, what you're left with is a drawer full of rent receipts.
Oh, wow. Yep.
If you're paying a mortgage, you're left with a house that you own. That's an asset, right? There's a difference. And I think that is something that we need people to understand. And the earlier you do that, the more powerful the economic effect is of owning your own. And it's yours. It's something that you can sell, you can leverage, you can borrow against, you can leave to your children, right? It's an asset, right? Renting an apartment is not. And if you're going to spend that kind of money on a monthly basis, why not spend it in a way that might be able to create a return on the investment for you?
What do you say to this? I only make $50,000 in the city of Chicago. I can't afford a house.
Well, again, I think that you're right. The cost of homes has, especially since the pandemic, has been going up steadily. Chicago is still more affordable than most major cities in the country, but it's still very expensive. It used to be a time when, the median price for a home was like 150,000. Then it was 250,000. Then it was 350,000, and somewhere between 350 and 400,000 now, median home price in this area. It's over 450,000 nationwide is sort of the median home price. So it is becoming more and more expensive. Interest rates have gone up since the pandemic. Though I think people need to keep the interest rates in some perspective. The, you know, 3%, 3.5% interest rates that we saw in the pandemic were because of the pandemic. Interest rates for mortgages have never been like that, right? And probably never will be again, unless we see another pandemic. So interest rates of 6, 7% are good. My mother, when she bought her house back in the 80s, I think she was looking at like an 11 or 12% interest rate on her mortgage, right? So it's all sort of relative, right? So people were saying, well, I don't want to buy now because interest rates are so high. No, interest rates are really about average right now. They're not high. They're not low, but they're not high. An interest rate of 6 or 7% is not bad. I think when I bought my first house, my interest rate was like 7.99% or something like that, right? So it's,
But with
this
that
is actually a
income,
good time to buy, actually.
so with that income range though, is it affordable? Can you eventually buy a house if you're making an average salary of $50,000? Is that achievable?
Well, that's interesting. So one of the things that we found is that it often does take some down payment, closing costs, assistance to close that gap because homes are very expensive. And often, because again, you're talking about a mortgage that's going to cost you probably what you'd be paying for rent, maybe a little more. And I mean, we have to be realistic. There's some additional costs to being a homeowner, right? If a window gets broken or the water heater goes out or whatever, there's no landlord to call, right? You're the landlord now, right? You have to fix that. And that costs some money. So when we put people in homes, we want to make sure they have some reserves to cover those costs. But so what is usually the barrier, however, is the amount of money up front that you need to buy a house for your down payment and your closing costs and to buy the appraisal and the survey and all of that stuff. So what we find is that often to get people over the finish line, we have to try and see, and for a lot of people, see if we can find them some grant money. And NHS is great at that, right? We have been able to provide people sources of down payment assistance grants for a long time, and we still do, and we're always on the hunt for new programs so that we can connect people with down payment assistance. Not every mortgage borrower needs it, but we are also working on mortgage products that are affordable as well. We have a special product called our 3C product that's specific for people buying homes in East Garfield Park and Humboldt Park. That's only 3.5% interest rate, right? No private mortgage insurance. 3% down payment. So these are affordable. It's more affordable than the FHA loan.
And I want to go
Same
deeper
fees.
on that. And what you're saying is what I wanted to have the conversation go deeper into that when our people say, I can't afford a house. A lot of my peers still don't know about these programs.
Exactly.
They don't know that it's a lot of layering. They don't know that these programs, these grants, these down payment assistant monies, even closing cost monies exist. So I'm glad you went there about those different ways to still become a homeowner, even with $50,000. I talked to another person who said by the time she finished with her client, they had over $35,000 in grants to buy that home, and it lowered the purchase cost. And they were making maybe $55,000, but she was able to find her. It was a realtor. She was able to find her client different programs to layer to help this family own a home. And a lot of people don't know that there are ways to home ownership through these programs, through these grants, through your lender, through organizations like NHS. They think, nope, it's not for me. I can't buy it. I'll just go get the $1,800 apartment, the $2,500 apartment. And, that's why I think what you're saying is that the education that NHS offers through the homeownership classes, telling them about it's different programs, and it's also other costs that you have to be prepared for. And a lot of folks walk into home ownership very blindly and then get mad at the process because they didn't do the research.
And then I think you're right, right? And you know, because when we talk about home buyer education, it's not like we're um, teaching somebody that's uneducated. Home buying is a particular specific process that we're teaching you about. I mean, I wouldn't go out and buy life insurance until I sat down with somebody that explained to me all of the different kinds of life insurance and, you know, how you go about buying life, blah, 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 right? Same thing with buying a home. And you're right. And that's the kind of stuff we can teach you. Is how do you comparison shop mortgages, right? What mortgage is good for you? Not just because somebody has a flashy ad on television. There are lots of mortgages that come with down payment assistance programs of their own. You can always come to somebody like NHS, but there are other lenders that have down payment assistance programs. Sometimes some of the government agencies like the City of Chicago and the Illinois Housing Development Authority have their own down payment assistance programs that you can access. CHA's got a down payment assistance program that you can access and don't even have to be a CHA resident. So these are things that people don't know that can, in fact, make home ownership accessible to them and affordable, at least as affordable as renting an apartment. It's super important.
Is that we talk about the education of home ownership. I have a funny story about, like, you know, the education that's needed and people still don't know as you learn the different stuff that you run into in home ownership, right? So I did get for example, my condo through NHS, and I got the home warranty. And this is just like typical stuff that you don't know of being a homeowner. I buy my home warranty, my furnace breaks. I don't call the home warranty because I didn't know, and this is so funny. I didn't know. I paid for it out of pocket, then called them back. I paid to get my furnace fixed out of pocket, and then called the warranty company. Was like, okay, so y'all owe me $800. They was like, no, we're gonna give you $400.
Right,
I'm
exactly.
like, we're gonna give you $400. They was like, it took them 4 months to give me that money, but it was like, okay, this will be a first time that we will give you, this will be the first and last time. But anything breaks in your house, this is all that's covered. You call us first, then we have, so the education and just talking to your peers and talking to homeowners and talking to people, but the education and knowing what to ask and look out for and being educated in different processes in the home ownership, you just have to be really resourceful in the information. But yeah, that was just, I want to share that. Certain things you still don't know, but it's a learning process. And I didn't get
Yes,
a
that's what our home buyer education program is trying
yeah.
is making sure that people are smart consumers, right?
Yep.
Yeah.
Yeah. Federal cuts are looming, right? We're hearing about our new current administration, federal cuts to CDFIs. $300 million is being proposed to the reduction of HUD's budget. How is NHS preparing to protect access to home ownership for marginalized communities? And what strategies are in place to make sure people aren't left behind when government support is being pulled back?
Yeah, and it is it's a critical issue right now, because you know reductions in the HUD budget are not the only federal resources. There's the Home Investment Partnership Act program, there's CDBG, there's the CDFI fund. Um, there are all of these federal resources that help states and cities to create and preserve housing that's affordable to working families, right? And to, you know, low income folks, like, you know, public housing and housing choice vouchers and stuff like that. All of this stuff is under threat. These are the kinds of programs that organizations like NHS and other CDFIs and other nonprofits leverage to be able to bring resources to under-resourced communities. And so they are under threat. We are trying to be smart about that. We haven't felt direct impacts yet. But as you know, Congress is in the process of putting together a budget now. And after that budget passes, we will see sort of where the dust settled. We are in constant, and as I said, we're an advocacy agency too, right? So we're in constant contact, constant conversation and dialogue with our congressional representatives, our representatives in the state legislature and the governor's office, with the city council members and people in the mayor's office, with the folks at the county. We're in constant communication with them about advocating to preserve those resources that the residents of the communities we serve need, and also how to pivot if resources from the federal government are not available. What are other things that we can do? And so we've been down in Springfield. The state had a huge budget deficit, but they did not abandon disadvantaged communities, and there were some good resources and funding that came out of this budget that was just passed by the state legislature to do that. The city is looking at trying to do innovative stuff like green social housing and the housing development bond. Stay on your local officials, because they're the ones that are doing the work to make sure that resources are there to keep communities strong and healthy, even if the federal government is pulling back some of those resources. We're also obviously in conversation with philanthropy, because it's important for philanthropy to be part of the conversation, part of the partnership, and part of the resources that will fill some of the resource holes that are left. Because at the end of the day, streets have to be fixed, and unhoused people have to be housed, and people still have to be able to go to the hospital and get medical care, and people still need to be able to access affordable homes and apartments. This doesn't go away. And so we're out there, we're still building and rehabbing, we're still educating people, we're still lending, and we're still advocating. And we are in conversation with our partners all across the city, all across the country, actually, to make sure that we are coming up with strategies and we continue to advocate for folks. And it's important for people not to just be spectators. At the end of the day, this affects your life, your kids, your school, your community, your neighborhood. And so you need to make sure your voice is heard. You need to be at, these town hall meetings and, on the phone with your legislative representatives, and let them know, what's vitally important.
That was just about to lead to my question about what does accountability looks like for elected officials, but you touched right onto it. A question that I want to ask that often comes up, the stigma around the word affordable housing. Why is that, and what's driving that, do you think?
So that's interesting. And you're right. Sometimes there is a stigma, even with our own people, right? I think we have often bought into this stereotype of, that is often promulgated by people that don't live in our neighborhoods, don't look like us, and don't have our best interests at heart. Starting back in, what was it, the 70s and 80s, when they were, saying that everybody on welfare was a welfare queen and all this kind of stuff. It's actually African Americans are not the majority of people on public assistance, for instance, right? Well, actually, Caucasians are the largest percentage of people on public assistance, if nothing else, just because they're the largest percentage of the population generally, right? So we often feed into these stereotypes. Some of it is when an affordable housing project goes up, it's important to hold the people who own those projects accountable for managing their properties and managing their tenants well. That's number one. Number two, so for instance, I was part of a project when I was with the city that was being done on the north side. At the time, it was Joe Moore's ward. I don't know whose ward it is now. But same thing, we had a bunch of residents from the neighborhood that came in and said, we don't want this affordable housing project here, blah, blah, blah. And when I explained to them what affordable meant, I was like, most of the people in this audience would qualify to live in this building. And I think the other thing is that affordable housing the definition of affordable housing, I think, has evolved over time just because how much it costs to live in the United States and a large city like the city of Chicago has changed over time. Affordable housing doesn't necessarily mean 30% AMI, right? Where you're only making $20,000 a year, right? There are people making 50, 60, sometimes even $70,000 a year that qualify to live in affordable housing because it is so expensive now. Housing is it's such an expense. And then you add on, having to pay for daycare for the kid, and you've got some student loans that you got to pay off and some credit cards, and being able to afford a decent place to live is becoming harder and harder for everybody that's not, wealthy. And so I think especially in the work that we do, which is home ownership, affordable home ownership has a much different meaning. I think than people's perception of home ownership is, public housing projects and that sort of thing. Home ownership, affordable housing means lots of different stuff. It's townhomes, it's mixed income developments, it's homes. It means a lot, and it often brings both beautification and economic stimulus to neighborhoods. However, again, home ownership is not the same thing as affordable home ownership is not the same thing as affordable rental. And I think communities need both. And I think affordable rental is what public agencies tend to pour the most resources into. And affordable rental is what most people think of when they think affordable housing. And affordable housing is also home ownership as well. And shared ownership housing, condos like you live in, and co-ops, right, can be affordable housing as well.
You said that eloquently. That was a great breakdown. Is home ownership still the American dream in 2025?
Well, we're trying to make sure that it stays the American dream. What we don't want is a society of the haves and the have-nots, right? What did somebody say today? We're becoming a society of the haves and the have-yachts. Home ownership should not be only available to the wealthiest people in the country, right? Home ownership should be available for middle and working class families. And so we're working hard to make sure that is indeed the case, because it really is the American dream. It's not only putting down roots in a neighborhood and building community with your neighbors, but it's also an economic investment that can benefit your family and your neighborhood as well. And we want it to continue. It will always be. The fight is to make sure it's available widely and not just to the people who already have all of the economic advantages in this country.
This has been a great interview. So, if people want to know more about NHS Chicago, get involved. Are you taking donations? Are you looking for investors? Do you want the support of, how can people get involved, know more, donate?
All of the above, all of the above. So a couple things. If you're interested in home ownership or our classes, getting a loan, buying a home, qualifying for a mortgage, definitely give us a call. We're at 773-329-4111, or you can find us on the web at nhschicago.org. We are a nonprofit organization, and so absolutely we are always looking for donors and partners. We are always looking for new donors and partners. We also have currently right now, because again, NHS is 50 years old, and we have served over 250,000, over 250,000 residents in that time period. And so we are definitely asking those that have had an opportunity to get a house through NHS or get a loan through NHS or take one of our classes or were helped by our foreclosure prevention counseling or whatever it was, we're asking you to donate $50, 50 for 50, right? 50 to celebrate 50 years of providing services and looking out for the residents in our South and West Side communities and our suburban communities. If you are a sophisticated investor, we have all kinds of investment opportunities from mortgage-backed securities to new markets tax credits and all kinds of investment opportunities. And these are social impact investments. So not only do you get a return on your investment, but you also get the return of knowing that you're having a positive social impact. And of course, if you are a foundation or a wealthy donor who's looking for a way to use philanthropy that is going to have a really significant impact on the lives of others, this is a way, NHS is a way to do that as well.
One thing I want to have you explain on, you say NHS Chicago. If I lived in Springfield, can I utilize the services of NHS? Can I get a loan through NHS if I lived outside of the city or outside of the suburbs?
So NHS is a Illinois licensed mortgagee. So we can lend to anybody, anywhere in the state of Illinois. Because of the wonders of Zoom and Teams and other virtual platforms, we actually recently we just did a look at the legislative districts in Illinois that we serve. And what we found is that we have people coming to NHS, especially now because they can reach us virtually, from all over the state of Illinois. So it doesn't matter where you live in the state of Illinois, you can reach out to NHS and we may be able to help.
Anthony Simpkins, has been a pleasure.
Thank you, Rashanah. It's been definitely a pleasure.
Thanks for tuning in to Someone You Need to Know. If you enjoyed today's episode, be sure to follow the podcast on all major platforms and subscribe to my YouTube channel, Rashanah B, for more inspiring stories. Until next time, keep shining, keep building, and keep making the world a better place, one story at a time.